Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to Basis Loaded with Joe Schmit. I am Joe Schmit, and this episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. This is the first episode of the summer, back after a brief spring holiday. What better way to celebrate than to stay indoors, avoid the Canadian smoke, and break down the latest from the NDPSR report. Starting with butter, this butter number coming in at 241.80 represents a plus 5 to the CME 1 week average of 236.70. So that is the low week at the CME. You would expect higher than normal basis based upon that benchmark, and that's what we got. Plus 5 is well over our expected plus 2 positive basis. We traded 10 loads on the CME, a little bit close to our expected 3.5 million pounds here, coming in just a little bit short of 3.2. It's interesting, if you look back to the June 10th NDPSR number, they revised that price down 2 cents while adding 600,000 pounds of product. So a big revision from 2 weeks ago, but all in all, in butter, I would have to say that this number came in as expected. Moving on to cheese, this block number, 149.64. That represents a plus 3.5 to the CME 1 week average of 246.15, 3.5 respectable basis, especially since you're considering 14 lows traded on the CME. Even with that volume at the CME, we still failed to achieve our expected 12.5 million pound volume, falling well short, almost 1.3 million pounds under on this week's reported sales. So higher than expected basis on lower than expected volume in the block. If you move on to barrels, this barrel number 158.71, that represents a plus 2.5 to the CME 2 week average of 156.10. Now that is the high 2 week average at the CME. Barrels made a low, then bounced back a little bit, only to fail and make new lows. So at this high week, you would expect lower than normal basis, and that's exactly what we got. 2.5 over is well below our expected 4 to 6 basis, and that low basis was with really light volume at the CME, only 3 loads. Both blocks and barrels, light volume at the CME relative to recent weeks. Volume here on the NDPSR also falling below expected levels, just breaking the 13.2 million pound threshold, well below our 13.5 expected sales volume. So in the barrel, disappointing volume and disappointing basis. In whey, 31.09. That represents a plus 4 to the CME 1 week average of 27.30. However, in whey, of course, we are looking at that June 10th number of 32.46. So the manufacturer basically had to discount by 1.5 cents to move pretty good volume here on the NDPSR, 6.8 million pounds. That's with 31 loads traded last week at the CME, which would equate to roughly 1.2 million pounds. So even if you subtract out that 1.2 million pounds that we traded at the CME, you're still talking about 5.7 million pounds traded on previously negotiated contracts. Before I went on vacation, I said that I felt that we would be approaching the 30-cent level by the time June pricing wrapped up. Well, that's today, and NDPSR whey still begrudgingly holding in around that 31-cent level. That's even with the CME below 30 cents for now 6 weeks. So pretty good price here on NDPSR, way above 31 cents. And again, robust sales volume, 6.8 million pounds, well above our expected 4.5 million. And then lastly, non-fat, 117.60. That represents a plus 1, almost 1.5 to the CME 1 week average of 116.25. We traded 5 loads on the CME, light volume at the CME. Extremely light volume here on the NDPSR, only 14 million pounds, well below our expected 20. So all in all, I would have to call that a nice price on lower than expected volume. We'll see what they have in store for us on the NDPSR as prices at the CME are now exploring new lower levels. So, as I said, this is the final week of June pricing. June is done and dusted. 404 coming in at $14.91 in class 3. That is 1 cent lower than the futures expired, $14.92 Christopher Columbus. Class 4 coming in well over at $18.26, so pretty wide. Class 3, Class 4 inverted spread. If you carry currency in CME equivalents out through the remainder of the 5-week July pricing cycle, currently getting a July Class 3 $13.85, July Class 4 18 even. So we have some elevated prices out on the futures forward curve. We'll see what they have in store for us in the weeks to come. Until then, on behalf of Paige and the entire EverAg Insights team, thanks so much. Good to be back here at work. Talk next week. Bye.